Good afternoon and welcome to Closing Bell. I am Anuj, with me Prashant in the Mumbai studio, and the markets, the signs were there, but were the signs there for this kind of a day? Perhaps not. Hand on heart, nobody would have thought that the market would fall the way it's fallen today, 325 points. And tell you what, in the process, it's taken out some really crucial levels. I mean, it's still last hour to go, and you never know with our market, the last hour could really go anywhere. But the Nifty is trading below the 20-day exponential moving average. It's trading below the Wednesday low. Wednesday low, in fact, was broken quite convincingly in the morning first hour itself. I am watching out for now the Bank Nifty, because that's really been the index which has been carrying the market, and that's now right between that 5 and 10-day exponential moving average. But the big warning sign today has come in the broader market. I mean, look at the advanced decline. All through the last 2 months, even on weekdays, the advanced decline was very strong. But now you have advanced decline which is at 1:6 and counting. So the big question is this the big global catch-up play which me and Prashant were discussing in the morning, that the market perhaps can keep outperforming for a limited period of time, but eventually if all markets keep going down, at some point you have to participate. And let's watch out for the FI data, because for last couple of days we've been getting sell number and there's been shorting in F&O. Prashant, good afternoon. So today has been quite eerie.
Oh, it has been, Anuj. And as you said, I mean, we were talking about in the morning, right? That, decoupling, all of this stuff happens for some time, but eventually you can't have very large divergences like what we have this year, where, the US is down 18-19% and the market here is up 4% in local currency terms. Dollar terms, of course, I mean, the gap reduces a little bit because, the market here is also slightly lower in dollar terms. But then, even compared in dollar terms, the gap is substantial, and that rarely lasts. These episodic outperformance zones happen. I mean, it's happened in 2018, it's happened in 2015, it's happened in 2007, it's happened in 2002. But broadly, things catch up. I mean, sooner than later. Is this the beginning of that catch up? We will see. I have to say, though, there is no real panic or anything. I mean, I've spoken to a bunch of investors. The point is, these are pullbacks. Given the ferocity of the moves higher, you're seeing pullbacks across the board, and that's how this is being viewed as of now, unless, of course, this starts to continue. One other feedback, and Nimish, of course, will be able to give us a better sense in terms of dealing rooms and flows, etc. And it's been evident. I mean, last couple of days, FIs have come back as sellers, and that is no different today as well. So FIs have turned sellers again. That's the general feedback that I got speaking to a bunch today. All right, let's get you what's lined up here on the show. We have stocks which have taken a knock after continued global weakness. It's hurting IT, auto stocks which are leading declines. Healthcare stocks are showing some amount of resilience. Today's trading session will see significant activity from passive funds and adjustments in Sensex and FTSE global equity indices. So that's the impact we'll outline for you in a bit. We'll take stock of the volatility in the market and the top sectors to remain invested with Chandradeep Singh and Varun Daga of Giri Capital on Alpha Managers segment in a bit from now.
Okay, but first up, as always, the market, by the way, is trying to recover now from the lows. So just keep an eye on that, whether this recovery lasts or not. But the financial Nifty index is trying to lead the recovery once again. There it is, as you can see. But because the decline has been so sharp, it doesn't look big, but from the lows, there's a decent recovery which is on right now. Mitesh is joining us for last hour calls. First up, Mitesh, hi, good afternoon. Bold from the blue really for the market today, but your sense of how things have turned, and whether this is some kind of a trend reversal, or is the trend still largely on the upside, and how are you approaching it now?
So morning, Anuj. I think good afternoon, sorry. In the morning, Anuj, we were talking about the fact that I don't want to buy this dip, purely because the intraday indicator was slightly on the shakier ground. My understanding is that this is a short-term or an immediate-term trend which is turned corrective, but the medium-term trend remains positive, which means that basically you'll have a stronger pullback than what you've been having for the last couple of days or weeks. So we talked about 17,500 as one of the target areas. I think we have hit that. In case we start breaking to today's low, then I think, the 17,400 was a gap area will come into picture. But I think broadly, then this market could see a slightly deeper correction to about levels of 17,150 as well. So I think that's the worst case scenario which I'm assuming. I think overall the trend still remains on the upside on a medium term charts, but the immediate trend is on the negative side. So in that sense, I think traders have to possibly lighten up, wait for a bigger dip to buy into, and till then I think the market will be choppy, volatile, and slightly biased on the downside. On the stock front, I have a sell on Petronet. I think that's a stock which is slightly breaking down. That's a sell with a stop at about levels of 215 for targets of 200. And the other one is Power Finance Corporation is also breaking below key support averages. So that's a sell as well. Keep a stop at about levels of 116. Look for targets of 107.
All right. Mitesh, thank you very much. We'll come back to you in a bit. There's a decent bounce which is there. We'll see how far it goes. The bounce started, I'll tell you exactly, at 225. We were at 17,512 and it is already about a 70 odd point bounce from the day's low that we have seen. So we'll see. Dipan Mehta is director at Elixir Equities. He's joining us right now to take some questions. Dipan, great to have you with us here. Thank you very much. How are you looking at the screen today, and any thoughts at the price action so far?
Yeah, good afternoon, Prashant, and thanks for having me on your show. Yeah, actually, I'm watching the market and with surprise at the correction which has taken place today. But I heard your initial commentary and I agree with you that there can be only so much of decoupling. And at some point of time, I think corrections in global markets are going to catch up with us, and that's what's taking place. The most disappointing aspect, of course, is the FI figures have turned quite nasty and negative in quite a large quantum. And that certainly is never a good sign. But I think if you're a long-term investor and you're looking at a 3 to 5 year type of a view, I think these are great times to buy gradually into good quality businesses. Typically, when the market starts to rally, you never really get a chance to get into these companies, but these are good opportunities. Something which has fallen maybe 10-15% from its recent high, maybe a good entry point and provide some margin of safety.
Okay. Well, that's on the Nifty. There's been a decent enough bounce that you're seeing. Even the mid-cap index and advanced decline seeing a bit of a recovery. With our market, the last hour has really been crucial, and so many times it's staged last hour pullbacks. Is the start of something big? We'll find out. In terms of other stocks, Dipan, hi, good afternoon. What clearly stands out today is selling in consumption names. Consumer is something which was leading this market. And if you look at the top 5 or 6 losers, they're mostly consumption names. Tata Consumer, Hero, Mahindra and Mahindra. Your view?
Good afternoon, Anuj. I think it's more to do with the fact that the stocks which have rallied the most, that's where the selling pressure is coming through. And I wouldn't rule out even local traders, investors trying to book profits over there or maybe cut their losses in these companies. And these are the favorite companies. They've been reporting good numbers. The commentary has been positive. The outlook for the next couple of quarters in terms of earnings were great. And in a way, I think a few weeks ago, there were good trading opportunities. And some amount of sell-off is taking place on account of lightening of positions by the traders over there. I don't think we are seeing any material institutional selling in these counters, especially not of the long-term nature.
Okay. There are some technical changes in the Sensex and FTSE indices which will take place. Vivek has been, of course, tracking that. He's joining us again to recap the changes and the flow-wise impact. Vivek, over to you.
Well, that's right. So today's trading session, we are actually seeing quite a bit of activity, especially among some of the names that we'll be highlighting. Now, the main reason for this particular change and the increased volume activity especially is the fact that we are seeing quite a bit of changes as far as the FTSE index is concerned, and also some weight changes in the Sensex. So now remember, these announcements were done prior. The FTSE announcement was done exactly 1 month ago, and the effective date is Monday, which means that the adjustments are being made in today's trading session. Sensex, the announcement was made last week, and it's going to be interesting to see how exactly these stocks stack up after the adjustment comes into effect. So some of the buy flows as far as the Sensex is concerned is in Kotak Mahindra Bank and IndusInd Bank, while sell flows are in SBI and HCL Tech. When you're talking about the FTSE, these include inclusions, exclusions, as well as rate changes. Some of the key stocks that are on the radar are Indian Hotels, CG Power, Gujarat Fluorochem, Schaeffler India, Linde India, as well as Motherson Sumi Wiring, all of which are seeing buy flows in today's trading session. India Bulls and Tata Power are seeing sell flows. Remember, active fund managers typically have positioning into this particular stock as soon as the announcements are made, even do a little bit of pre-positioning. So don't be surprised if some of the stocks you see are reacting quite opposite to the flows that you're seeing in today's trading session.
Thank you very much for that. I mean, those are adjustments which will take place, but largely, as Vivek also pointed out, technical in nature, one-time kind of adjustments, no more, no less. Let's just take a quick look at the broader market space and see where else we are seeing activity. Vedanta is down 7%. I mean, this entire tire space which went up like a rocket yesterday. And I was scratching my head wondering what's going on. I mean, they were being bid like, the market for tire stocks is going to not open today. MRF, Apollo Tires, Tata, Balkrishna Industries. I can't spot CEAT with any large cuts, but the ones I mentioned are down between 5 and 6% on some of the highest volumes so far. Any thoughts, Dipan, on these tire names, if you like any of them? And then do comment, if you will, on Vedanta as well. There's been a bit of flip-flop in terms of where this investment is going to come through in the listed entity or at the holding company level. So the market doesn't like that.
Yeah, Prashant, let's go with Vedanta first. And that's why, I think the market has this issue with corporate governance standards of this particular management. And again, those issues have cropped up over here. Technically, I think all Vedanta's businesses in India, or rather the group businesses in India, are in Vedanta Limited. And even at the recent investor meet, there was a lot of excitement around this particular semiconductor. And at that point of time, it did appear that it would all happen through Vedanta, the listed company. And now this particular step of the management certainly has not gone down well. And as I said, I think, that with Vedanta, they have a bit of a history as far as corporate governance is concerned. And this certainly doesn't help the interest of minority shareholders. Coming specifically to tires, yes, even I was surprised with the up move which we saw over there. And the best pick within the space still remains Balakrishna Industries. If you have some kind of opportunity, or rather, I would say, contrarian investing strategy, then Balakrishna certainly, is a good stock to look at. It's corrected significantly, and last couple of quarters have been a bit disappointing because of the way Europe and US markets have shaped up. But once the markets start to turn around over there, given the expansion and the backward integration which they have done, I think they are well on their path of increasing global market share from 6-7% to 10% and maintaining that consistent 15-20% type of bottom line, top line growth rate, which we have been seeing in this company. So very positive only on Balakrishna Industries. Other tire stocks I would avoid on account of competitive pressures. And overall, I think pretty patchy track record per se.
Okay, well, by the way, the Bank Nifty has now recovered over 250 points from the low. The low was 4502. Now 4600 was that zone of 5 and 10 day exponential moving average. Now it'll be interesting to see if this recovery can continue, or there's some selling which comes back on this recovery. The other space to track, of course, is IT, and a couple of them which stand out. TCS, which is down 2%, and Emphasis, which is down almost 4%. I'm pointing these two specifically because they I believe have exposure to FedEx, which is something we had discussed in the morning as well. So maybe that's Emphasis, not Infosys. Emphasis is the stock that I was referring to. Dipan, your view on some of these IT names, and we're getting very close to 52-week lows on most of them.
Yeah, that's right, Anuj. I think it's quite disappointing. But, in about a month's time, 4 weeks or so, we'll be into another earnings season. And we all are going to quiz these managements as to what the demand scenario is. I think until the con calls of the last quarter, they were pretty confident that there is no major disruption or no major pressure on demand. But let's see how this quarter has shaped up and what response they're getting from their customers. And by and large, I think the industry has got great long-term prospects. But yes, I think you will have to see this patch of underperformance or correction for the next maybe couple of quarters or so But when things turn around, they turn around so well, and you don't get a chance to buy into these companies as well. So I'm remaining invested in Infosys, TCS, Tata Elixir, some of the names that we own, and riding out this particular bearish phase in them, and hoping that if we have a slightly longer term view, these companies can still deliver decent outperformance over the Sensex and the Nifty.
Okay, well, for now, let's discuss a couple of stocks that we normally don't talk about. It's SJVN and NHPC. Basically, in the hydropower space, Nimesh is joining us. Nimesh, there's a very interesting view from CLSA.
Well, absolutely, Anujana, and for the first time, I'm seeing a influential broker like CLSA putting out a note on NHPC and SJV, and they've initiated coverage in both the stocks. And I said, this is maybe the first institutional brokerage to have a coverage on SJV, and CLSA has initiated a buy report with a target price of 42. They believe that the stock has a potential to double in the next 4 years. SJVN, according to the CLSA note, is firm plans to reinvent itself as a renewable power, power as a service play, and with a 1.6 gigawatt of new hydropower projects and 14 gigawatts of new pumped storage projects. Look at the revenue projections that the CLS has put out. After just reporting 7% growth in the last 5 years, now CLS is forecasting earnings equity, earnings to double in the next 5 years from now, EPS to increase by 45%, and ROE to expand by 365 basis points. That's a huge number that CLS has put out. So, interesting note on SJVN, a buy rating by CLSA with a target price of 42. So that's SJVN. The second stock is NHPC. Again, first time I'm hearing getting a report from a foreign brokerage like CLSA on NHPC. They have a buy rating with a target price of 51. Now NHPC is among the top 3 leaders in the RE developers, and is one of the largest players in hydropower projects. Now, even in NHPC, look at the numbers that they are quoting about. They believe that NHPC is going to be a key beneficiary of India's net zero commitments, which will lead to a big earnings potential and earnings growth for a company like NHPC. So therefore, CLS is forecasting revenue earnings equity of growth of 131% over the next 4-5 years. With almost 7.5 gigawatt of work under construction under NHPC. In fact, they are also expecting, even for NHPC, a 45% growth in EPS and a 217% growth in ROE over the next 4 years. So they're talking about big numbers, and for both NHPC and for SJVN, CLS put out a note with a buy rating and big upsides. On SJVN, CLS believes the stock can double in the next 4 years.
That's indeed is interesting. Nimesh, first of all, we don't talk about these names at all. I mean, it doesn't come up at all. And then on top of that, for initiations like this, quite something. Let me put that to Nimesh. Thank you for that. Let me put that to Dipan. Dipan, would this prompt you to look at these companies a little bit more in terms of?
Well, I think the way Nimesh puts it, really compelling stories at this point of time. And renewable energy certainly is one of the investment themes that many investors are chasing. And, a lot of money has gone into the likes of Adani Green and Tata Power per se, and even JSW Energy. I think the private sector energy companies, power companies going into renewable are getting higher and higher P multiple. And then why not these companies as well? So sure, I think these stocks can certainly do well. My only issue is the PSU tag which they have, and generally PSUs, even after 10 years and new government, so much of kind of enthusiasm and encouragement given to them. If you see on a longer term basis, they still underperform the private sector players. So you could have a trading kind of a run in these companies. They are very cheap. You can justify buying into them. But from a longer term investment, I still prefer the private sector renewable energy companies.
Okay, Dipan, stay with us. What we'll do is we'll take a quick break here. We'll come back and we'll take stock of the market once more. Down about 304 points. We are off the lows by about 60 points or so. So far there is not a extension of this move in any great way, but it's not coming back to the lows as well. I mean, 30 minutes, 40 minutes of trade still in front of us. We'll come back. We'll also have Chandradeep Singh and Varun Daga of Giri Capital on markets when we return on the other side. Stay with us. Okay, welcome back. Dipan Mehta, of course, is still with us. The market's down 280, 290 points. So that will that impulse to try and buy the dip come back again? We'll see. Next week, of course, you got the FOMC, and that'll. For now, it's what the decision is on Wednesday, and I think will react to that decision on Thursday morning. And later today, out of the US, we get the University of Michigan inflation expectations data. 3-5 year expectations data, and that number is very strong. I think it'll only reinforce 75 and maybe bring about calls for 100 as well. 100, one doesn't know. The bar, I would say, is too high, very high for 100, but 75 very much in the price. I think that is pretty clear all around as well. Dipan, IndusInd Bank is seeing a real lease of life. I mean, from the day the results were announced, Q1 results, it's up almost 25%, 1230 now. Do you own this? Would you want to own something like this?
Yeah, Prashant, disclosure that we and our clients do own IndusInd Bank, and it had been a bit disappointment when the bank got into so much of trouble as far as NPAs were concerned, and it's just about playing catch up. I think the last quarter numbers and management commentary was very positive. They are now finally having industry-leading growth rates, and NPAs are well under control. I think under new management, a lot of systems also have been overhauled to ensure that they are not in the same NPA mess which they were before. Valuation-wise, there's a lot of comfort in IndusInd Bank. It is a shadow from the past PE and price-to-book earnings multiple it used to trade at. And at present, I think it's at a significant discount to the likes of HDFC, ICICI, Kotak. It was trading around the same price-earning price-to-book earlier, maybe a couple of years ago before the IL&FS crisis. So there's way for the PEs to get rated upwards as well, and earnings also will flow through quite nicely over the next few quarters. So I think the stock should do exceedingly well and maybe outperform the banking index as well.
Dipan, we will let you go on that note today. Thanks a lot for joining us and have a good weekend. Just see the intraday chart of Delta Corp. All of a sudden, and there's a block which happened, and I just look at that move of, with the move started at 213 or thereabout at 235, and from that point, it's moved up to 230. Massive move is what you've seen. We have our next guest joining us, Chandradeep Singh and Varun Daga, co-founders and fund managers of Giri Capital, now joining us. Gentlemen, good afternoon. Thanks a lot for joining us.